All right, let's jump right in. Bitcoin's price has been taking a nosedive, and for a lot of people, that spells panic. But what if the smartest money in the room is seeing something completely different? Today, we're going to break down some analysis from Altcoin Daily that suggests this very crash is creating the perfect setup for some mind-blowing 500x returns. We're going to dig into why the market dropped and then explore the specific altcoins that some people believe could be absolutely life-changing. Let's get into it.
This right here, this quote from billionaire and early Bitcoin investor Barry Silbert, it really gets to the heart of what we're talking about today. While pretty much everyone else is selling out of fear, he's on the hunt for projects with that 500x potential. It sets up this really powerful counterintuitive idea. Crashes aren't just about losing money. For some, they are the ultimate buying opportunity.
And that really is the million-dollar question, isn't it? It just feels wrong. How can you even begin to think about 500x gains when the market is bleeding red? Well, to find that answer, we first have to understand what actually caused this crash to begin with.
Okay, so first things first, we got to unpack the why. The analysis we're looking at points to a couple of really key factors that basically created a perfect storm for Bitcoin's price to plummet.
So, the first factor is something called a liquidity trap. Think about it like this. Bitcoin's price just rocketed up so fast that it never really built a stable foundation on the way up. There weren't a lot of people buying or selling in that price range. So when the price finally started to drop, there was no floor to catch it. It was like falling through thin air, just plunging straight down until it finally hit a level where there were enough buyers to provide some support.
Now the second factor, and this was pointed out by analyst Tom Lee, it actually comes from a really surprising place, the gold market. Get this. There was a single massive move in gold worth a staggering $5.2 trillion. To give you some perspective, that's 4 times the entire market cap of Bitcoin at that time. This huge shift set off a chain reaction of margin calls, which forced investors to sell off other assets to cover their bets. And when that happens, the smaller, more volatile assets like Bitcoin, they often get hit the hardest.
Okay, but here's where things get really interesting, and context is everything. Even though gold's recent move hurt Bitcoin, the long-term story is completely different. Just look at this chart. It shows the percentage of time each asset has failed to beat inflation since Bitcoin was created. You can see that gold has underperformed almost half the time, 44%. Bitcoin, on the other hand, only 3% of the time. So yeah, it's volatile in the short term, but the data suggests it's been a way better store of value over its lifetime.
All right, so that's the why of the crash. Now let's pivot and talk about the opportunities. And first up is Cardano, which is making a huge move to fix what a lot of people see as its single biggest weakness.
You know, for the longest time, Cardano's had this one big knock against it. It just didn't have a solid stablecoin ecosystem, which is really the lifeblood of DeFi, or decentralized finance. But Charles Hoskinson, the founder, just announced a massive solution. A new stablecoin called USDCX, and it's designed to bring what he calls monster liquidity right into the Cardano network. This is a huge foundational play to attract the kind of money that can fuel explosive growth.
And look, this isn't just some run-of-the-mill stablecoin. The whole focus here is on making the user experience incredibly smooth. It's instantly convertible to the main USDC, and, this is crucial, it lets you send it directly from your personal wallet to huge exchanges like Coinbase and Binance. That gets rid of a ton of friction for users and could be a massive catalyst for growth inside the Cardano ecosystem, just by making it way easier for money to flow in.
Okay, so now for the part I know you've been waiting for. We're shifting gears from these big infrastructure upgrades to the direct, high-risk, high-reward picks that billionaire Barry Silbert is talking about.
So Silbert calls out 2 projects he thinks have that 500x juice: Zcash, which is a privacy coin, and BitTensor, a decentralized AI project. But the analysis we're digging into makes a really strong case for why one of these is a much more strategic bet than the other.
And the way to think about this is pretty simple, actually. Investing in Zcash is kind of like trying to pick one single stock in a hot new industry. It might be the big winner, sure, but it's a very specific bet. Investing in BitTensor, on the other hand, is like investing in the entire infrastructure, the roads and bridges for decentralized AI. It's a bet on the growth of the whole market.
See, BitTensor isn't just one AI model. It's a whole protocol where hundreds of these specialized subnets are all competing against each other to solve complex problems. It's like this brutal but effective survival of the fittest system. The ineffective projects, the BS projects, they get pushed out, and the high-quality ones,
They get rewarded with more funding. This creates a system that's literally designed to constantly improve itself from the inside out.
All right, sticking with that theme of infrastructure, let's shift our focus to another huge altcoin that's being framed as a critical infrastructure play, Solana. Here's the big, simple idea they're putting forward. If Bitcoin is digital gold, right, the ultimate store of value asset, then Solana is trying to be the financial infrastructure for the internet. It's not trying to be Bitcoin. It's trying to be the rails that a whole new generation of financial apps get built on top of.
And the growth? Well, the numbers are just insane. Now, the total payment volume on Solana is still pretty small compared to the legacy guys, but its year-over-year growth rate is an explosive 755%. That kind of growth is a huge signal that it might not stay small for very long.
I mean, just to put that 755% into perspective, compare it to a mature platform like PayPal. PayPal's growth is solid, don't get me wrong, but Solana is on a completely different planet. This is exactly why it's getting so much attention as potential core infrastructure for the future of finance.
Okay, we've talked about some absolutely massive potential here, but we have to ground this in reality. This final section is all about understanding the huge risk that comes along with chasing these kinds of returns.
You know, when you're talking about these crazy returns, market cap is the whole game. For a giant like Bitcoin, a 5x or 10x is still incredible, but a 500x, it's pretty much inconceivable. The same goes for a big altcoin like Solana. The reason these smaller projects like BitTensor are even in the 500x conversation is simple. It takes way less new money to make their value skyrocket.
And honestly, this brings us to maybe the single most important piece of advice from this whole analysis. These altcoin plays are extremely speculative. They really might go to zero. So the foundational advice for most people looking long-term stays the same. Build your base with Bitcoin and Ethereum, the two most established players in the entire space.
And that leaves us with one final pretty big question, doesn't it? We've seen the argument for chasing those massive 500x returns with these high-risk projects, but we've also heard the advice to stick with the relative safety of the big guys. So, in a market this wild and volatile, what's the bigger risk? Missing out on a potentially life-changing investment or losing everything you have on a risky bet? That's the question every single investor in this space has to answer for themselves.